All right, let's talk gold today. Welcome back to the iWealth podcast. Recently we've been getting a lot of inquiries about gold. And quite frankly, over the last 30 years, I've had a lot of inquiries about gold. I have nothing against gold. My common statement is always like, if you had a bar of gold, can you take that in today and buy a lawnmower with it? We know the answer is no. Maybe the same answer as crypto or something like that. At least gold is physical. You can hold it and have it. You can buy gold two different ways. You can buy the physical gold and you can put it in your safe or put it in a bank safe or whatever you're going to do with it. And then you can also buy an ETF or something that tracks the price of gold. I've had clients through the years that have did both. Quite frankly, though, when you look at gold and you look at inflation, it just hasn't been a powerful investment. There's periods of time where there's civil unrest or recessions where gold kind of plays its hand. I think there's been a lot of commercials that have been going on with gold, and that's probably why we're getting inquiries about it. But I just want to give you some facts and some numbers so you can think about this in your own terms and how it might fit for you. When it comes to gold and it comes to alternative investments, we're not opposed to that, and sometimes we use them. We have money managers that will put a 10% sleeve in precious metals or gold or something, but it's not the physical gold you put in your safe. It's an ETF or something that tracks gold. But let's just talk about some numbers. I've got them in front of me, so pardon my reading here. But from 1990 to 2020, gold increased 360%. So when you look at 1990 to 2020, that's a 30-year period. Gold went up 360%. But the Dow Jones, which is 30 large cap companies in the United States, was up over 990% over that same 30 period. So when you look at those 30 years, it's did really, really well when you look at the S&P 500 versus gold. Now, there's different periods where you could buy it and you can play the game on how does it do, but just buy and hold, stocks have 3 times the amount as gold did. Since 1957, so going back a little bit farther, the S&P has delivered an average annual average rate of return of 10.5%. It's unadjusted for taking a look at reinvesting dividends and things like that, but it's 6.7% after the adjustment for inflation. So when you factor in inflation, you're still getting a 6.7% rate of return since 1957. Over the past 100 years, the annual rate of return is 10% for the S&P 500, 500 large company stocks. Now let's go to gold, for instance. Gold's average annual rate of return from 71 to 2019 was 10.6%, but its returns are highly dependent on the time period you selected, which we talked about. And gold shines most during market crises, such as generally, but it lags in extended periods of time. So let's say that 08 and 09, the financial crisis came, or COVID came. Like all of a sudden people leave stocks and they buy gold, and that's where it sometimes outperforms. The question you have to ask yourself is, when should you buy gold? Do you want a market time and figure out when that is? Or do you hire a professional that gets you in and out based upon what they see is kind of coming in the future? You see, right now, we don't expect that there's going to be a recession in the next 6 to 18 months. If that's the case, stocks should outperform gold. Nobody knows for sure, but that would be our opinion. So should somebody sell their stocks today that have did well and buy gold? My opinion is no. Last stat to throw at you. Over the last 20 to 30 years, the S&P average annual rate of return, again, 500 large company stocks, with the dividends, so when stocks pay out their interest and dividends, have been between 10 and 12%. Gold's usually trailed, and it's coming in around 7 to 8% rate of return. So not a horrible investment by any mean. It just hasn't been the type of investment that outperforms stocks. I think buying big, old, and good stocks that pay dividends, stocks that are going to be around, is a winner long term. Short term, it's anybody's guess. So I just wanted to give you some stats. I want to give you your opinion on gold because we're getting some questions. And if it's interesting to you, hopefully you found this interesting. And if you have any questions, just reach out to any of the advisors at iWealth. We're certainly here to have that conversation with you to give you better understanding and clarity when it comes to your goals and what you want to have happen.